Thank you for having me.
Let's check the markets. Split decision still, Dow down, Nasdaq, S&P up. Michael Lee joins me now. Michael, you know, I read your commentary, and you do not think that a debt agreement is good news for the market. Why do you say that?
Well, you may see a little bit of a short-term bounce for stocks in that the default risk is completely off the table. Not that it was ever a realistic option, but what has to happen is the Treasury needs to fund their liquidity account, and to do that, they're going to issue somewhere between $500 and $800 billion of short-term Treasury bills. Now, this will take a massive amount of liquidity out of the market. You may have noticed that the market, particularly tech stocks, have taken off since this Silicon Valley bailout, and a lot of that has to do with the emergency liquidity that the Fed and the Treasury have pumped in the market to backstop a lot of banks. Well, this liquidity is, it's a backdoor version of QE, and what will happen right after this debt ceiling is a backdoor version of quantitative tightening, and that tightening should put some near-term pressure on stocks while I think the economy continues to deteriorate. However, if these massive AI stocks keep pushing the major indices higher, you could see a flattish or somewhat higher market, but I think underneath the surface, things are gradually getting worse.
Yeah, well, this is where we stand now. The end of the month is near. Thursday is June 1st. The Dow's down 3% this month, while the Nasdaq is up 6%. That's quite a dichotomy. Much of it has to do with NVIDIA and AI, as you say. Your thoughts?
Yeah, it's all AI. So without the artificial intelligence stocks, the market overall, the S&P is up about 8-9% this year. Without those stocks, it'd be down 2 to 3%. So it's not only NVIDIA, it's Microsoft powering the market through. The market really loves Apple, even though their revenue is down 4% year over year. So you still have a tremendous amount of liquidity sloshing around out there. So that I saw the Cow guy mentioning this earlier today. The rates or the percentage chance for another rate hike in June has gone from basically zero a month ago to up close to 2/3 or over 60% now. So I think as the market soldiers on, and if it continues to get pushed higher, the Fed's going to have to do more and more to stomp out this excess liquidity. Otherwise, we'll be stuck with inflation as far as the eye can see.
What do you think we'll hear from the jobs report on Friday? That's when we get the jobs report for the month of May. We're expecting a slowdown in the number of jobs restored or created, but is the Fed's work in terms of bringing down the job market working?
I don't know if we're going to see that in this number. I think we might have a few more numbers to go. But if you've been watching and paying attention, half of the job growth over the last year, job growth that has defied all reason, logic, and expectation, has come from birth-death estimates. So calculation on a spreadsheet by the Bureau of Labor Statistics. So I would say we'll probably get a headline pretty good number, which will be revised dramatically lower. So what I'd be looking at in the headline this Friday is not necessarily the headline number, but the revisions and what we actually see from the prior 2 months and how those look, because the last couple of months, those have been particularly horrific. And so I think that trend needs to continue. And I really think the unemployment rate needs to increase by about 50% from here for us to get unemployment under control.
Wow. Wow.
Excuse me, inflation under control. Sorry.
Okay. Gotcha. We were talking about Apple before, and I just pulled it up. 178.99. So just moments ago, Apple shares hit an annual high. So yeah, tech just keeps booming. NVIDIA is very expensive right now. Let's see. This year, it's more than doubled. NVIDIA is up 166%. 166% since January. Are there any alternatives to buy part of this AI game a little bit cheaper?
Well, you know what? It's really hard to say, and it's really hard to find, which is part of the reason why NVIDIA is trading at 50 times I'm sorry, 20 times revenue. If their revenue if they keep increasing and going from their $7 or $8 billion a quarter, which they were guiding for the next quarter, and they raise that guidance to north of 11 billion, the largest raise in revenue guidance I've ever seen in my career from a company that size. But for every dollar of revenue that comes in the door, you're paying over 20 times that. Yeah. So I think because there's so few players, this is such an unexplored place, it's hard to figure out where to invest in it. You're paying unbelievable multiples to get involved here. So I'd say the safer play is Microsoft, which is not exactly cheap, but it's cheaper than NVIDIA.
Mike, you know I'm not Stuart. You don't have to bring up Microsoft, but okay, got it. Mike Lee, good to see you, as always.
Thanks, Lauren.
Let's take a look at some other stocks that are moving at this hour.